So what's going on, fellow day traders? You've been at trading for some time, yet you have yet to find consistency in your winning ways. And don't fret, I've been doing this for 14 years, and I remember early on in my career, I blew up a $50,000 account. I blew up a $30,000 account. I thought the world was going to end. This wasn't for me until I started paying attention to the details. Now, I'm going to cover 5 things that seem rudimentary, that seem like, hey, whatever. But I promise you, once you really just dig down and implement these things, you can start being profitable tomorrow. So, number one, what are your expectations? Is this a side hustle? Is this your main source of income? Are you looking to fire your boss? Are you looking to build wealth long term? Whatever your expectations are, that needs to be your headliner. Why? Because your expectations and your goals are bigger than the trade. Remember that always. Your expectations and your goals are bigger than the trade. Now, number two, journaling. Now, you see how this all comes together. You're starting with your expectations. You are journaling your expectations. Now, why does this matter? This matters because pen to paper seems like the strongest form of affirmation, right? It's our commitment to ourselves. We are creating that contract between ourselves and the journey. So, journaling is very important. You want to journal why you won. You want to journal why you lost. You want to journal your entries. If you cannot name your entry, and you cannot name your exit, then that is not an ideal play. You have to be able to journal uh, what your strategy told you about that play. And you also have to be able to journal what the strategy told you about that play that maybe you got wrong, or what you didn't do right from the get-go. Now, number three, the 80-20 rule. Of course, you've heard the Pareto principle, but the 80-20 rule, let's talk about this really quickly. Trading is 10% strategy, 10% psychology, and 80% risk management. Now, if you fail to have the proper psychology, then your strategy goes out the window. You see, because without the proper mindset and discipline, you're not going to follow your strategy. Now, if you have a very tight strategy, and let's say you break your rules, then your psychology goes out the window because now you're under the duress of the loss. You see what I'm saying? So those are two key elements, right? And they're so important, even though they're 20%. Now, what's the 80%? The 80% is risk management. Now, the domino effect. If you derail from your strategy, you derail from your psychology. When that happens, your risk management goes to the toilet. This is when you start chasing plays. This is when you start revenge trading. This is when you start blowing up accounts. So always make sure that your psychology is in tip top condition and that your psychology complements your strategy. If the trade does not work out, that is okay. There is another trade. Do not compromise any one of those two, or the 80%, the big part of it, the risk management goes to the toilet, and so does your P&L. Now, moving over to another concept, number four, or maybe it's three. Well, it's four. It's four now, buddy. Okay, four is risk management. We talked about the 80-20. Risk management is so important. Now, we're going to do some basic math here. Let's say you have a $100,000 port and you're risking 1% per trade. Now, 1% is basically the industry standard. If you're risking any more than 1%, you are in for a world of hurt. But 1%, so I'm risking $1,000 for a 2-to-1 risk to reward. And I take 4 trades per day. I am still up 2%. Let's rewind. $100,000, I'm risking $1,000 per trade, or 1%. I hit a 2-to-1 trade, now I'm up $2,000. I lose a trade, I'm up 1,000. I lose a trade, I am break even. Now I win a trade one more time, and I am up $2,000. Now, Let's look at this play. We use the GoldenEye indicator at trade 1348, which dynamically shows you the probability of the play. At the point of the alert, you had a 50-50 probability. Of course, as the play matured, the probability improved. However, let's say you are risking $1,000. This is your zone. You now have the potential, and in this play, you far exceeded a 5 to 1. We have the win rate percentage required, all right, 17%. Now, if I go back into my settings here, I can set my risk to $1,000 and it will show you that you've made $4,500 on the trade, right? Now, what we're doing here is contract position sizing. So we did not allocate the full $1,000 for this trade. But guys, this is all about mathematics. Now we go ahead and we risk another 1%. We're going to go to the previous trade here, also to the downside. And this trade design, alerts us of 4 future contracts, and once again, a 5 to 1. You can see here that as long as you use mathematics, you will be profitable. Risk to reward is far more important than win rate, and a lot of traders, for the sake of the win rate, tend to prematurely exit trades and then begin to develop a scalper syndrome. And when you're entering and exiting trades too fast over time, you will find on average, you are going to hit 50%. But then what you're also going to see is maybe, just maybe, you're barely hitting 1 to 1. And over time, this affects the trader. This affects your portfolio. And then the final tip I have for you is acceleration of wealth at the trade level, not at the port level. Let me explain. There are a lot of traders who get into this game and think like, well, with $500, I'm going to become a millionaire. Now, with $500, a 1% risk is $5. You're only able to risk $5 per trade. That literally prices you out of the market. However, if you had $10,000, well, your 1% now becomes $100, which will allow you to play in the market, especially if you're looking to trade options or you're looking to trade futures. My favorite are futures because you get that linear effect, not the arbitrary value of the options contract. So that's why I favor futures. What a lot of beginner traders tend to do is they only have $500. They oversize themselves with, let's say, half their port, $250, and they think that that will be sustainable and help them build their wealth. You can't do it at the trade level. I dare you consider some alternatives. Maybe build up your portfolio or or attempt a funded trader challenge. Now, I could recommend Apex Funded Trader. I'll include that link down in the description. And if you pass those challenges, you now have access to monies you previously would not have. And this would allow you to build your confidence in your system, build your repetition, build your psychology, practice risk management, all of those things that do come together. And of course, as you journal your journey, you will find that you're building wealth over time. I hope you found this video helpful. This is Gabe. I'm signing out. And of course, join me each and every morning as I day trade futures live. And of course, we play the broader markets, NVIDIA, SPY, AMD, you name it. We have a lot of fun. So make sure you hit the subscribe button, leave a comment down below, hit the thumbs up, and join me. I'll see you on the other side. Peace.